So today we're going to be talking about my reaction to this video, will the US dollar collapse? So I was doing some research on my previous video. I did a video uploaded day before yesterday, and it was a video where I basically broke down the US dollar is crashing and why the dollar is crashing. Well, when I did that video, I was just kind of doing some research on what other people are saying out there, and what, basically what they're saying, and you look for things that you agree with, you don't agree with, if somebody thought about something, because you want to put together the best content for your subscribers. That's my goal anyway for my subscribers. By the way, if you're not subscribed, I would appreciate if you smash that subscribe button and hit a thumbs up for trying to be a good guy in the YouTube space. But I want to talk about, I came across this video. I actually watched this full video, and there are so many things that it got under my skin on this video, because this gentleman here, nothing against him, these are his beliefs. The channel's Wolves in Finance, Zach Gregorio, or whatever, Gregorio, CPA. So this guy could not have more of a mainstream thought process. So if you follow my channel, you watch my videos, chances are you like or have an affinity or appreciate cryptocurrency, because we're all about building an army of early crypto adopters who are going to be able to gain massive wealth by being the first in and making wise decisions with our crypto. Obviously, crypto is a risky space, and you got to be very careful. So again, not financial advice, but that's my goal with crypto. I believe in the fundamentals of cryptocurrency. That's why I'm starting this series, or I'm doing this series. This will be the second video about the US dollar crashing. So I believe in the fundamentals and the technology of Bitcoin, and I believe because we're early adopters, we're going to have be able to position ourselves for really a tremendous wealth transformation that's going to occur. I believe, if you follow my channel, I believe in earning passive income, creating passive income businesses. I have an entire course, the Crypto Passive Profits course. I have a free newsletter, the Crypto Passive Profits newsletter. You can see that in the description. You can feel free to subscribe to that. So, but that's where my thought pattern is. That's what my belief system is when it comes to cryptocurrency. And chances are you have some overlap with that thought pattern, or you wouldn't be here. But when you watch this video, this is why this gentleman here is exactly why we are in early. Sometimes when people have been in cryptocurrency for a few years, they get the feeling that they're late to the party. It's like, I wasn't back there when Bitcoin was 50 cents or when Bitcoin was, $300. I got in after that big bull run. So maybe I'm late. No. Bitcoin's going to go to the freaking moon based on the fundamentals. In my personal amateur crypto enthusiast opinion, Bitcoin's going to go to $1 million and beyond. But enough about that. Let's talk about this video. I wanted to get into this video, and I just want you to hear what he has to say, because you hear his comments, his logic, the method behind his logic is where the masses are right now, particularly the so-called experts that are literally nothing more than programmed bots from a mainstream financial machine, and they don't even understand that their thought patterns are not their own. They're not independent in their way of thinking. But enough about that. Let's get into this. Listen to this gentleman.
Back, friends, to another weekly video. We are in the middle of the coronavirus pandemic, and the U.S. has been issuing massive stimulus bills. Now, these stimulus bills are huge. In March, the U.S. passed the CARES Act with $2.2 trillion in stimulus. Just last week, Congress passed a new stimulus bill for $484 billion in stimulus, and there's discussions of another stimulus bill in the works. The United States does not have excess money coming into the budget. So the question is, whenever there's these big stimulus bills, who's paying for them? What happens is the Federal Reserve prints more money to send more US dollars into the economy to generate more growth.
Now I got to tell you, at this point I'm listening and I'm like, yeah, exactly. That's right, why Bitcoin and gold and hard assets are going to do so well in the future. But let's keep going.
Now, whenever the Federal Reserve prints more money, there's a general concern about inflation, and there's a lot of people out there with concerns over the stability of the US dollar. I've been noticing a bunch of videos go on YouTube lately about people raising these issues. So I wanted to make this video and explain how currency markets really work. Now I'm going to be giving you a lot of information very fast, so just sit back, relax, and we're going to talk about the US dollar.
The challenge is this guy's, a so-called expert or professional, and he's going to educate people, and he's going to continue the propaganda machine. And unfortunately, if you follow this gentleman's advice, at least the advice in this video, I'm not saying all of his financial advice is bad. I don't know who the guy is specifically. I just know about this one video. But if you follow his advice in this one video, you're going to find yourself holding a whole bunch of worthless investments that have been devalued through inflation over time. And you're going to be behind on the curve to be able to pick up assets, whether it's gold, real estate, and or, of course, Bitcoin and cryptocurrencies. You're not looking to create a cryptocurrency business. A lot of people are like, why would you want to create a business that spits off passive income every single month in the form of cryptocurrency? Crypto is risky. Yeah, crypto is risky, but it's all about earning as much, is doing everything you can to leverage your time and efforts to earn as much crypto as fast as you can, as quick as you can. But you can only have that mindset if you're not stuck in this gentleman's mindset. Let's keep going.
The most important thing in any discussion about currencies is that the real issue is about pricing. This is a practical day-to-day problem everyone faces in the real world. When you go to the store and you buy a loaf of bread, you want that price to be fairly consistent. So imagine you go to buy a loaf of bread. Let's say it is about $2.50. You're going to pay for that bread with some currency. If that currency is unstable, the price of the bread is going to fluctuate wildly. So suddenly, that loaf of bread might be $4 one day or $1 the next day. That is why it is so important to have stable currency markets. Without it, your simple day-to-day activities become almost impossible. Many of you will know the history of the Federal Reserve. The goal of the Federal Reserve is to manage inflation of the currency and maintain stable prices. The US used to be on what's called the gold standard, meaning the US dollar was tied to the price of gold. Gold is a commodity which fluctuates wildly. So your currency then fluctuates wildly, and the price of bread fluctuates wildly.
Okay, this is the first absolute ridiculous statement that he makes. He totally misframes this. So he says the price of gold goes up wildly, and therefore the currency, the price isn't stable. Therefore the currency wouldn't be stable, and what the currency would buy would be very inconsistent. If that was the logic, how is it that we've been on primarily a gold standard economic systems have been the most stable economic systems in the world? By the way, I'm not a big gold bug. I think it's wise to own a little bit of gold, but I favor cryptocurrencies over gold for various reasons. However, let's just stick with his logic for a moment. If it's true that gold and the buying power of gold, notice the keyword that he did not use, the buying power of gold. If it's true that the buying power of gold fluctuates so much, we would never use it. The reality is the buying power of gold historically stays very consistent because it's treated as a speculative commodity. The markets cause the fiat pricing to go up and down. But again, when an ounce of gold or a gram of gold or whatever would buy, a loaf of bread, whatever that pricing was, the gram of gold would have always bought a loaf of bread. The pricing would have been totally stable. The dollar was backed by gold, so it was essentially saying, hey, I want to go buy this with 1 ounce of gold. No matter what, the 1 ounce of gold always bought that, which means those amount of dollars always bought that thing. It was only through getting off the gold standard that gold became, instead of being an anchor to the financial system, it became treated and traded like a commodity. By the way, this is also why Bitcoin prices, this is partly why Bitcoin prices seem to fluctuate so much. It's a relatively small market with a tremendous amount of speculation. Therefore, the price is in cryptocurrencies, in Bitcoin especially, is very volatile. However, Bitcoin is less volatile than a lot of your altcoins, and gold is far less volatile than Bitcoin. The primary reason it's volatile, the key word is not that the price goes up and down. The key word is that the buying power stays extremely consistent over time.
The US abandoned the gold standard in 1971, which makes the US dollar a fiat currency. This means it is not backed by any—
Here's the other issue. Why did they abandon the US dollar? Because the British pound had essentially, they kept their pound backed by the US dollar. Backed by gold. And eventually they couldn't afford the wars, meaning they couldn't afford their expenses. They couldn't afford to pay back based on a hard asset. So they did not break away from the gold standard. They tried to stick to it, and they eventually led to a collapse of their currency, which is not the end of the world, by the way. It all depends on how quickly you can rebuild from that collapse. However, the federal government had to break away because they realized that they could not keep printing money. They could not manipulate the currency in the way that they were, and their expenses were exceeding their ability to repay them. So what did? They broke away from the gold standard. And there's more to that. That's an oversimplified version, but let's keep going. Sorry, this video gets me so wound up because I understand how many people are unknowingly getting misled with this way of thinking. And again, it's not his fault either. He went through the education system, everything else. You have to understand, by the time you think like the masses, you are going to be behind in everything that the masses are behind on. So if you think like the masses, you're going to be behind like the masses. Most people aren't wealthy. Most people are struggling to get by. If you focus on the most people, then you're going to have what most people have.
Anything other than the US government. This allows the Federal Reserve to manage inflation of the currency without having to worry about fluctuations in the price of gold. The result of all of this is that you can then go to the store and buy a loaf of bread with some confidence that the prices are going to be fairly stable, somewhere around $2.50. I cannot emphasize enough how important it is to manage inflation. You can look at many examples throughout history that when currencies become unstable, revolutions happen. People become very upset when their money suddenly becomes worthless. Governments are overthrown, things become violent, and the most famous of these examples is the massive inflation that Germany experienced right before World War II. They had massive inflation, and this was one of the main drivers that enabled the Nazi Party to come to power. The Federal Reserve in the United States knows this, and you can see this in the importance they have placed in policy decisions on managing inflation. The most important thing is maintaining the stability of the currency.
That's exactly right. However, and he does know this, he has to know this. If you look at how the Federal Reserve manages inflation, they manage inflation by raising interest rates. It creates a deflationary environment when they raise interest rates. The challenge is they're in a position now where they cannot raise interest rates. When I was a kid, people were getting home mortgages and they're paying over 10% double-digit interest. Nowadays, no one could even imagine paying that much for a home mortgage. We're in, sub 5, sub 4% interest rates in some places and lower. And we may go even lower. They're talking about negative interest rates. Why? Why would they do this? Because the Federal Reserve, if they raise interest rates, it's going to cause a mega collapse in the economy. And they're trying to prevent, they think that they can play God and break financial cycles. And you cannot do that. And so the idea that what's happening is the Federal Reserve is slowly losing its Federal Reserve authority or losing its power to control inflation. That's literally what's happening if you continue to pay attention. They're basically losing that ability to manage inflation, and at some point it probably either becomes it becomes a runaway train. What they should do is they should raise interest rates, but if they raise interest rates, it's going to cause a collapse in the economy. That's not politically expedient. They're supposed to be independent, but they are appointed by the president, etc. So they're probably not going to raise interest rates. Historically, they've not raised interest rates fast enough or aggressive enough to truly keep inflation in check. Instead, what they do is they adjust how they calculate inflation. So it looks better, but it's not. Every couple of years, every 3 to 4 years, they make changes to how they adjust inflation. The way they measure inflation. The way they measure inflation today is radically, radically different than the way that they measured inflation, 15, 20 years ago. And you would have to ask yourself, why would that need to change? Why would they have to make adjustments to that, periodically? That's the question.
Proof of this is that the US dollar is what is called the reserve currency of the world. This means there are institutions around the world that have money in their savings account. A lot of this money around the world is kept in US dollars as the reserve currency. This is done because the US dollar is known as a stable currency. It's not going to fluctuate wildly in value. Now, the currency market is the largest financial market in the world. It is much bigger than the stock market. So let's take a look at a chart. This is from the Bank for International Settlements, and this shows the volume of trades as a percentage. And you can see that the US dollar makes up 88% of the currency trades. The US dollar is by far the most used currency in the world. This also shows what are considered the top 4 most attractive currencies: the US dollar, the euro, the Japanese yen, and the British pound sterling. So if you're going to hold money in your savings account, you are generally going to hold one of those 4 currencies because they are generally accepted as the most stable. We also see on this chart the Australian dollar, the Canadian dollar, the Swiss franc, and the Chinese renminbi. An important feature when you discuss currencies is that strategically, they are a zero-sum game. There is always a winner and a loser because you're always transferring from one currency to another. We're talking about your savings account, so it needs to exist in some form of currency. If you wanted to get out of US dollars, you would convert them to euros, or you would convert euros to pound sterling or some other currency. So the question we are looking at...
If you wanted to get out of US dollars, you would go to another currency. No, if I wanted to go to US dollars, I wouldn't go to another fiat currency. I'm going to go to gold, silver, Bitcoin, business asset that kicks off passive income, or I'm going to go to some sort of cash flow asset, such as either dividend stocks, which I would rather be a hard asset, like real estate and a rental property. But anyway, let's keep going.
Is whether the US stimulus bills will make the US dollar unattractive. So on a practical level, what's going to happen here? If it's unattractive, you're going to take your US dollars and convert them into some other form of currency, probably one of the other 3 of the top 4 major currencies.
Nope, not at all.
So let's go down the list and talk about each of the other 3 main currencies.
I want to talk about this for a minute. He keeps saying that if you didn't want to keep US dollars, I want you to imagine an American going and saying, hey, you know what? I'm losing faith in my US dollar. I think I'm going to buy some euros. No, they're not. If they lose faith in the US dollar, they're going to buy cryptocurrency and or gold and or silver. That's what they're going to do. It's what they've always done historically. Not go buy up, some euros.
The euro is a fairly young currency. The euro started in 1999, so it has only been around about 20 years. The point of the euro is that by combining all of Europe, you would have an economy that could rival the United States. But unfortunately, the euro has had a lot of currency issues over the last 20 years. We have seen that it is difficult to coordinate monetary policy across different countries that have their own governments, their own government debt, and their own social policies.
The reason it's difficult is because they can't print their own money. The U.S. would have the exact same problem if we were to, say, commit to Canada or Mexico or commit to anybody else to have our currencies and our economies tied together through a single currency. It's because they don't have the sovereign ability to print more money. So clearly that's the issue. That's why the euro's never risen to the way that it has. But I digress. I hope you're getting some of the craziness this guy's putting out.
In comparison with the US dollar is more attractive. The Japanese yen is generally considered as a way to get exposure to Asian markets. But obviously, Japan is just a small part of Asia, so this has its limitations. Also, Japan historically has made some controversial monetary policy decisions which impacts the currency's attractiveness. In comparison with the US dollar is more attractive. The British pound is usually attractive because out of the four major currencies, it has historically been the most conservative in terms of monetary policy. However, the United Kingdom is dealing with the Brexit craziness, which casts a shadow over their currency. In comparison with the United States, the US dollar is more attractive. Looking next at the smaller currencies, they are generally not as attractive as the top four major currencies. And on a practical level, there just is not enough volume. So there are so many US dollars around the world, you could not practically convert them all into these smaller currencies. So if you wanted to get rid of your US dollars, you would have to convert them into one of these other currencies. So now that we've talked about them,
I want to say the way he just said there makes no sense. He said you could never, there's too many dollars to convert into the smaller currencies. That is a fundamental, very fundamental misnomer, like misstatement. Like he should know that. That's not how the foreign exchange market works. You absolutely can convert every single US dollar into Australian dollars. But what it would do is it would decrease the conversion price of the US dollar, and it would increase the price of the Australian dollar comparably. It would take like a whole lot more US dollars to buy one Australian dollar. That's called the foreign exchange, the Forex market. That makes no sense how he just said that and stated that. I'm telling you, this is unreal. But people watch this. Heck, he's got 7,000 views on his little channel, and people are watching this clearly. It's just mind-blowing.
Let me ask you the question. Which one of these other currencies are you going to transfer your US dollars into? There aren't really that many great options, which is
None. Bitcoin.
why so many people around the world are holding US dollars. With that background, how could a currency crisis happen with the US dollar? Now, there have been currency crises in the past in history, and so we know a little bit about how they work. Currency is about confidence. So there would be a lack of confidence in the US ability to back their currency. We would see a massive flight from the US dollar into other currencies, probably the pound, the yen, or the euro. There would be massive inflation in the US, and people would want to use other countries' currencies to make transactions because they would be more stable. So that brings us to our current situation with the coronavirus. The unique thing in this crisis is that it is global. Every country around the world is dealing with the same problem. So there is no incentive to move your currency from the US to England, Europe, or anywhere else. They are just as bad as us. So from a currency standpoint, they're even less attractive. So in a crisis that affects the entire globe, people actually want more US dollars. So all of this US stimulus...
This isn't exactly right. If you look at some of the trade volumes, that is historically what happens. People want more US dollars. But if you look at some of the trade volumes that have been existing between the currencies, like he was talking about earlier, like 88% of the volume on the Forex market is the US dollar. Some of those numbers are down. Other numbers that are also down is a lot of investors, a lot of hedge funds, and a lot of central banks oftentimes will buy up US dollars during economic, as is considered a safe haven. Those numbers are also down in this current crisis. And now we have an unprecedented crisis, so you have to ask yourself, why are those numbers down? Is it possible that someone could be concerned that the US's political decisions are bad for the US dollar? Of course that's what's going on. Same thing when he talked about earlier, the British pound, I believe. He was talking about the British pound, has been, the Japanese yen has been, the government has created some decisions that have caused concerns. That's exactly what's happening with the US dollar. The government's creating decisions that people are beginning to wonder, how are they going to get, you don't think people are watching our monetary policy strictly like, how are they going to get out of this mess? What are they going to try to do to navigate this mess? It's crazy.
Is actually being paid for by demand for US dollars around the world. People want US dollars. People want to buy US debt because in comparison to other countries, it is considered the most stable. It is supply and demand. The Federal Reserve is printing more money to supply the global demand for more US dollars. This is the benefit of being the reserve currency of the world.
Okay, first of all, that's crazy. He's making it sound like the Federal Reserve has to print more money because everybody wants to buy US debt. No, the federal government is responsible for issuing debt. If the credit card company says, man, we would really love for you to pay us more money, so why don't you take this, why don't you go take this loan? Or why don't we increase your credit line so you can, pay us more money? You wouldn't be like, oh, wow, okay. The credit card companies want my dollars. So like that makes no sense. You would never do that. That is so ridiculous. The reality is the US government is issuing a lot more debt and they really need people to keep buying it. The US as it stands right now financially only exists because other countries are willing to use their citizens' tax-paying dollars to buy up our debt. At some point, when that starts to change and they start getting nervous and they start wondering if their debt is getting devalued, meaning is it all of a sudden worth less by the time it gets paid back because the buying power of their dollar is not as strong. Think about that. If you were going to buy a bond or hold somebody's note or let's just say, well, think about this one. It's like owner financing a piece of real estate. If you had a house you wanted to sell and someone wanted to buy it from you and you were like, you know what? They don't have enough money. They can pay me interest. I'll actually end up getting more for my property to take me, 20 years to get it. Are you willing to finance that property? Most people aren't. Most houses are not owner financed. Most people don't want to wait for their money. Now, think about this. It's even worse when you're like, okay, I'm going to sell this house for, $300,000. But by the time they pay me back, it's going to be a negative interest rate. So I'm only going to get back $250,000. Would you do that? Lose $50,000 to get the full payment of the house back over a 30-year period? Would you do that? No. But that's where we're headed into negative interest rate territory. It makes no sense, right? Or here's another one. Maybe you sell the house for $300,000. Maybe you end up getting $400,000 30 years later through all the payments. But by the time you get that $400,000 back, it will only buy $200,000 worth of stuff. The buying power has went down to what $200,000 was at the beginning of the 30-year term. Would you want to owner finance in that situation? Of course not. And that's where countries have got to watch. This is why they pay so much attention to our monetary policy. They're like, is it going to continue to be strong? Everybody across the board can agree that our monetary policy has created a weaker financial system based off of burden of debt over the past several decades. Everybody universally can agree that the U.S. economic system is not nearly as strong as it was several decades ago, universally. So the question is, how weak does it get before other countries start looking for alternatives? And then what are those alternatives? That's why you'll see some news stories about central banks starting to pick up small amounts of Bitcoin. It's why you see hedge funds buying Bitcoins at record paces. Some of the Grayscale hedge fund is buying 150% of the available minted Bitcoin, meaning that they're driving up the price by buying on the open market considerably. In a bear market, they're buying Bitcoin at crazy rates. In a bear market, when most retail investors, the masses are always wrong. The masses are getting out of crypto. The institutional investors, the hedge funds, are trying to buy it. Why? Because they understand the fundamentals as I'm explaining them to you. Let's keep going.
The world's demand for your currency pays for your country's stimulus bill. So what is the proof of all this? Well, we see it in financial markets. If there was a loss of demand for the US dollar, we would see it in the currency markets. We would see it in interest rates, and we don't see that. We see more demand for the US dollar. Even if there was a drop in demand, we would see it, and then the US would just change their policies to strengthen the US dollar. And that is
That's not, he says that like it's a flip of a switch. I just told you, most people across the board can agree that the U.S. economic system, the U.S. dollar, the debt burden, most people can agree across the board the financial system of the U.S. is not as strong as it was several decades ago. Why not? Why not? Because in order to strengthen the U.S. dollar, they have to raise interest rates. If they raise interest rates, it is going to collapse the U.S. economy and potentially on a very large scale. That's why. That's why they can't just flip a switch and suddenly make the dollar stronger. They can do it, but it would cause a tremendous amount of damage economically for most American citizens, and at the same time, it would be suicide politically.
the whole point of the Federal Reserve. The Federal Reserve is a bunch of really smart people who just sit there and watch financial markets. And they increase the supply of dollars or decrease the supply of dollars to maintain this stable currency. That is why the US dollar is the reserve currency of the world. Now, I'm not saying that the US dollar could never suffer a currency crisis.
Okay, isn't that what he just said? I want you to catch that. That is what he just said. If the Federal Reserve is watching markets and they're really smart and that's all they do, based on your current explanation, how in the world could we have a currency crisis? See, you got to understand there's holes in his logic, and I'm filling in the holes for you. That's what it bugged me when I watched this, and I'm like, wow, people need to pay attention to what men like this are saying because they're speaking out of two sides of their mouth, and that's part of the problem.
Of course, currencies can collapse, but the current coronavirus pandemic is not one of the scenarios that leads to currency collapse. Because everyone is suffering the same fate around the world. The scenario you have to worry about is...
Okay, everyone is suffering the same fate, but not everyone's devaluing their currency through issuing new debt at as fast of a rate. The country that does that is the one who's losing the fiat currency race, which we are doing that. We are printing more debt, far more debt than we have the ability to pull back in from taxes or manufacturing or whatever. So I mean that's not exactly right. We do suffer equally, but our governments all make decisions that affect us differently.
Let's say the United States was suffering from the coronavirus and there was no coronavirus in Europe. That would create a huge economic disparity, and you would start to see currencies move around the currency markets. But that's not the case today because everyone is in the same boat. Everybody is suffering. And so there is no incentive to move your currencies around. So what about gold and silver? A lot of people think about gold and silver as protection against currency collapse or protection against inflation. This is based on a hypothetical scenario that I find very unlikely. This is assuming that there is no other currency in the world that you could move your money into.
This is so stupid. First of all, it's only unlikely because you believe that everybody needs a fiat currency. But how come every time there's been a shift, every single time there's been a shift in financial and reserve currency, it's almost always been to a currency that was backed by gold. In this scenario that he's discussing, if we were going to stay on a fiat system, it would eventually have to get the faith of the citizens to want to use it. And in order to do that, it's got to be backed, it would have to be backed by a hard asset, which would be, you would not, you pass around ounces of gold or silver per se, but you would pass around dollars that were backed by that gold and silver, just like the US dollar once was, where $1 will always get you a certain amount of gold or a certain amount of silver. So the value, the buying power would be pegged to a hard asset.
Because even if the dollar collapsed, you could just start using euros. So why do you need gold and silver? So this scenario with gold and silver really assumes that every single central bank and currency in the world collapses at the exact same time. There would be no currency available to use, so people would fall back on gold and silver. I find this idea very unlikely because realistically, there would be some currency or some government in the world that would be able to stabilize their currency, or some new currency would just take its place. I really find it very unlikely that people would start walking into the grocery store and buying their loaf of bread with a bar of gold.
That's amazing to me. Like that, I mean, that is amazing that he says this, and he's almost smug about it. It's really kind of crazy. Oh my goodness. During the Roman time period, when they started debasing their currency. Anyway, he says there has to be a government somewhere that could stabilize their currency. He doesn't understand that, no, there doesn't have to be a government that could stabilize their current currency. There does not have to be. It could be a total financial fiat collapse that could exist. However, comma, what would happen in order, he said there has to be a government somewhere. In other words, there has to be some government that would fix our problems. Someone's got to fix us. We can't take care of it ourselves. We as individual citizens can't be responsible for our own financial well-being using something like a decentralized blockchain cryptocurrency. That's not possible, where we could all individually be the bank. I'm getting away from the point here. The reality is he's right. A country could come back and say, we need to reissue a currency, we need to do this right. They would have it based on something, though. It would either be based on gold, and or most likely it's going to be a digital currency. Got a video coming up on the digital dollar that's been talked about again recently. It's going to be based on a digital currency of some sort, but that digital currency ultimately would have to be backed by something that can't be easily hacked or easily inflated away, like a decentralized blockchain, I don't know, like cryptocurrency, something that's proven to work with a long history. That's how it would occur. It would have to be backed by something. Even if you weren't using cryptocurrency, somehow it would have to be based or tied. I mean, even if you weren't using Bitcoin, it would have to be based or tied to Bitcoin or to gold and silver. In order for a new currency to be created, they're going to have to back it by something. And the irony that he is missing that logic is just mind-blowing.
The other problem is that gold and silver are completely different asset classes from currency with different risk profiles. Gold and silver...
That is not true. That is only a modern way of thinking since we got the gold standard. That what he just said right now is a new logic in the past, probably 40-ish years of financial education. Gold and silver is a new asset class. That's because it's treated strictly like a commodity now. Most of history, gold and silver has not been a commodity. It has been a form of money. And the prices speculate, again, based on a commodity pricing of a fiat currency.
Are commodities which fluctuate wildly because the price is driven by supply and demand. When there's high demand for gold...
The price is not driven by supply and demand. It's driven by speculation. There's a very big difference. Speculation is when supply and demand is, I really want to own those Bitcoin. Like, I really believe in the future of Bitcoin. I want to own it because I think long term it's going to go up. I believe in the technology. That's supply and demand. Speculation is, I want to own it today because I think it's going to go up next week. I want to sell it and make a profit. That's speculation. That's what's going on the gold market. That's why the prices fluctuate so much.
The prices shoot up. When the demand goes down, the prices shoot down. So you have to be careful with using a commodity to hedge against a currency that is designed by its very nature not to fluctuate wildly. It is a completely different risk profile, so that's not really the most effective way to hedge. What about cryptocurrencies? This is a question that's asked a lot. Now, I
thought maybe this would be his redeeming moment. Spoiler alert, it's not.
I am not a fan of cryptocurrencies. If you watched my
That's not a shock based on this video. You can't even understand the logic of why they should work.
Channel, I've made a video about the problems with Bitcoin that you can watch if you're interested in hearing about that. But the essential issue is that currency...
Go subscribe to this channel because I promise you it's too juicy. I'm probably going to have to go watch that video and give you a reaction. So if you don't want to miss that, make certain you hit that subscribe button, hit that bell notification icon. I got a feeling that's going to be coming up in the next couple of weeks.
...are backed by a government, whereas Bitcoin is not backed by a government.
That's hilarious. That's why he doesn't like it. It's not backed by a government. That's hilarious.
With currencies, there's a physical location somewhere in the world where people own property, people own businesses, and are making transactions in that currency. With Bitcoin, there is no physical location. So there's no place you can go to physically spend your money. So if I'm holding a bunch of British pounds, I know I can jump on an airplane, fly to England, and actually spend my money there to buy food, to buy clothes, to buy a house, to buy whatever. If you take all your money and you put it into Bitcoins, Someone on the other end can pull all of their Bitcoins out and convert them into US dollars. Meanwhile, the Bitcoin market collapses and you're left holding a bag full of worthless Bitcoins, and there is nowhere in the world you can go spend that money. Ultimately,
this is so ridiculous. Oh my goodness, you can't go spend your money. You can't go spend the Roman currencies right now either. He's acting like there's no way that any currency can be devalued or debased, but he's acting like suddenly the entire world is going to sell Bitcoin, and it's amazing. You can't hold it in your hand, so therefore it's not real. You can't buy it and spend it. First of all, I did an entire video on several ways to easily spend Bitcoin. I'm going to link that video above, and I'll put it down in the description as well. Several ways to be able to spend Bitcoin. You got to watch that video. Again, he has, oh my goodness. Let's think about what he's saying. There's no physical place to go buy it or sell it, as if the only way to sell British pounds is to fly to Britain and somehow go into a physical store. That's the only way to do anything. That's like saying because you watch this video and you don't know where I live and you can't come to my house and shake my hand, then I'm not really here making a video. That's what he's saying about the currency. It's mind-blowing. It's like saying because you can't actually touch Windows because it's a program, then it's somehow Windows as an operating system is not very functional. Well, pun intended, but you know what I'm saying. This just is nuts.
The strength of a currency is about the people that currency represents.
Exactly. That's why cryptocurrency, that is absolutely the biggest argument for cryptocurrency versus fiat. Fiat is not about the people, it's about a government that has the ability to tax revenues and set monetary policy that actually works to devalue the currency because they can't pull in enough tax revenue, so they can manipulate the fiat buying power of their own currency. Bitcoin is all about the strength of the people who want it. You can't easily manipulate it in that way. It's the strength of Bitcoin is about the people that Bitcoin represents, meaning that hold Bitcoin or any cryptocurrency for that matter.
The real reason the US dollar is the most attractive currency in the world is because Americans work hard. We work the longest hours, we have the shortest vacation, we make a lot of money, and we spend that money in US dollars.
Okay, so many problems here. First of all, this is so American imperialism, it's ridiculous, and I can appreciate it. I can appreciate where this comes from, but because I am an American. However, Americans do not work longer hours and arguably don't work harder than some of the Asian cultures and some of the South American cultures. I mean, what means we're all humans. We're all capable of working hard. Now, the reality is what makes the US dollar so strong is we're massive consumers. We don't produce anything here, but we spend money. But the biggest reason we're able to spend that money is because most of us have jobs that exist based on government debt, meaning that you work for a company that is able to borrow money, and they're able to borrow that money through a financial system that is issuing debt very inexpensively. Otherwise, you wouldn't have a job in many cases, or there would be a lot fewer jobs. There would be a lot less people making the money. There'd be, the idea is if the American consumer is no longer spending, because we have a debt-based, spend-based economy, if the American consumer is no longer spending, then it literally kills. This is why they don't want to raise interest rates, because a lot of people would lose jobs, etc. But if the American consumer is not spending, then it literally kills one of the biggest propositions for the strength of the US dollar or the strength of the American economy. You understand, America has more people than almost any other country, more people working a larger, but it has nothing to do with the amount of hours we work or how much we necessarily produce per se, because we produce far less today, meaning actual physical goods manufacturing, than we did decades in the past. Anyway, this is just not, it's just not accurate, unfortunately.
So the reason why there is so much confidence in the US dollar is that even if the US economy is bad, and even if US debt is growing, there is confidence that the American citizen will be able to work their way out of it. Thank you so much.
That is exactly right. That is exactly right. There's confidence that through taxation, that the American government will be able to will be able to tax and create a system where eventually they can get out of debt. But people are beginning to realize that no, we're not going to be able to get out of debt. They've known for a long time America's not able to pay back their debts right now, but they're able to keep paying for now. They can keep servicing their debt for now. So for now, it's okay. But more than ever, people are watching. And if this gentleman is trying to assume that somehow Americans can work their way out and pay off their debt, that is just dead wrong. The US dollar is literally crashing, and crashing may be the wrong word. It is slowly losing its prominence, and it will possibly at some point totally just crash. I do believe that. Now, with that being said, am I all in on cryptocurrency? No, but it's fundamentally why I'm in this space to begin with. The technology makes sense. It makes total sense. The fundamentals prove, in my personal opinion, that Bitcoin ultimately goes up. Thank you so much for watching. Remember, crypto equals freedom. If you agree with anything that I said, smash that like button. And thank you for subscribing. Hit that bell notification icon. Crypto equals freedom. This is Crypto Wealth. I'm out.